welcome to another episode of The TradeStylist, the place where we try and craft your trade. This is the episode that goes out on the Easter weekend, so wish you all a happy Easter, 31st of March 2024. And we start with the disclaimers as always. Number one, that all views are personal, and number two, of course, that there are high risks in investments, especially in commodity futures and options. So, hello once again. I am Devajyoti, better known as DJ, and you can find me at TheTradeStylist. You can find me on YouTube, X, and on Instagram, and I'm here to craft your trade. So we start with our prayer, which is, may the trading gods be with us always, and we go towards the market update. So let's see how the markets have moved over the week. We are looking at the soft complex first, almost all positive. Robusta and Arabica gained again, and then of course cocoa continues. The story was, and if you have seen my section on CNBC, that the market touched $10,000 briefly, twice in fact, bounced back down a bit, but still highly positive over the week on week. Cotton, on the other hand, almost at the same level, facing a bit of resistance, but orange juice seems to be turning down, so there might be a trade opportunity there, and we're going to watch this. Sugar, on the other hand, went up, negated our trade, and we definitely exited that with a small loss, but then that's how the markets are, and we try, and that's why we keep a stop loss always. But wheat, on the other hand, corn on the other hand, are doing pretty well, as we can see here. So we are long corn and we are long wheat, as you know, over the past week, and both these markets bounced pretty well going into this long weekend. Soybean, same as last week, but soybean meal slightly down, while soybean oil is up slightly around 1% to close out the week. Now we look at YTD numbers, and we can see the sugar is almost where it was a year back, same kind of situation. But cocoa, that's the story, 283% and 232% year on year. And I think all the grains complex still negative, corn more so. But it seems to be that the acreage report that came out has gone positive in favor, and it's got bounced. And we'll talk about this in the middle section a little bit later. But now we go into TradeCraft, where we look at our trades for the week. As we can see, we had placed our trade at 2174. Market went up to 2250, and roughly we have exited that trade at a small loss. For a long time, it seemed like the market would come down. If you can see, there was a strong resistance at this level, and that's part of the reason we took this trade. It was a bearish overall trend, but now it's cost, and I think it's probably going to bounce, take up to 23, and then see how it goes. Maybe it starts a new rally. We don't know. If that's the case, then probably we reverse the trade and take another position, but that's for now. Going into the next trade, corn, as I told you, I was long at around 434. That's what my listing is, and with a target of 498. The market is bound, went as high as 460, closed at around 442. So we're still strongly positive, but we'll have to see how the market takes the report on the opening week on Tuesday. So yeah, positively bounced, as you can see. Wheat also, news coming out of Middle East. This is primarily because of Russia and the Ukraine war that's going on. And we do think that there's possibility that the market does bounce, and I was telling us that we need to watch the space, and it has been a trade that has executed, and we are long at roughly around 532 as of now. So that's where we are for the week. And now we look at trade speak, which is basically why and what is being said by the markets. So here we focus on the reasons, and there today the major reason that we look at the corn and the wheat markets bouncing is something that we discuss. Now if you look at the last 10-year history of the soybean and the corn spread, typically that tells you or gives you an idea between December to March of the year what the decisions are being made. And if the soybean spread is stronger, I mean the soybean minus the corn spread is stronger over the national weighted average, you would typically see that there would be more soybean acres, because the farmers typically look at that to decide their planting decision. It's not exactly a price point of view, and that's what people fail to forget. We need to take into account the fact that most of these farmers are very savvy farmers. They've been doing this for a long time, and they understand hedging, they understand options, they understand grain pricing, they understand elevators that occur in the US. And typically, that's what impacts the US acreage. So if we do not compare that and we do not look at that, and 9 times out of 10, I think this is something that has enabled me to sort of tide the markets in the right direction. And we're probably going to talk about this on one of the trade deeper sessions next week when we're looking at maize, and we'll see how this comparison happens. On the other side, on wheat is geopolitical as of now. It's primarily driven by the talks of stopping trade, of blocking trade, especially with the Red Sea issues just going on. And I think that's sort of the issue that we're finding. The other side also is the Ukraine. European Union has proposed, duties on cross-border grains coming in. There's talk of that, so there's definitely some kind of position happening where people are maybe taking a little bit of a risk cover on wheat, and that I think is going to be where the market's position when we have the short week next week opening on Tuesday. Moving on, we look at the trader peak, which is typically the points of interest, and we start with the headlines, where European green principles are definitely impacting trade restrictions. India controls the agricultural exports out of election. Falling corn prices have been pressurizing farmers, and they've definitely chosen to look at alternate crops. This is not just US, this is outside. COP28 again may not address agricultural climate, and this is exactly what we also saw in the passing of the EUDR regulation, a completely washed out and really toothless kind of a law, and I've written about it on LinkedIn as well, or on Twitter if you care to follow me. The Mexican presidential election could alter corn policy. The Brazilian soybeans face pretty tough weather conditions. And finally, USDA raises corn and soy production forecast, which is what we saw and how the markets reacted. Case in point is that amount that USDA did raise is definitely not going to be enough. Upcoming reports this week is the US Fed chair speak. We definitely have the US farm rolls and the other two as well. And now we look at trade strategy, which is the next on the list. And I think probably people might have heard of this. It's called the channel breakout strategy. And the channel breakout strategy basically looks at how the markets would behave if we consider it to be a trending market. Now understand this, we don't know at the point of considering a channel breakout whether it's already a channel. I mean, it's a post-mortem kind of a thing if we look at a channel and then say, hey, there was an opportunity here. But in the channel breakout strategy, typically if the market has been trending for a while, and this while is typically, for me, at least a couple of weeks, at that point of time, then you can try and utilize the channel breakout strategy to probably plug in if the market is going the opposite direction. I do not look at it as a continuation trade, and since it is not a trend following strategy, it's a trend when the trend is reversal, and that's a trend reversal strategy that we look at it. And that's my opinion. I mean, people can be different. Some people try and play it within the channel as well. I mean, as long as the market is bouncing within the bounds of the channel, you continue. I do think that's more risky, and I'll explain in the next graph why. So if you look at this, if you try and play this for every time that the market is within the channel, you would see that there is potential for the market to sort of take you out in terms of whatever stop losses you get. And this is Soybean Oil. This is the active chart right now. And there have been 3 channels in the past 1 year, and pretty strong channels like that. However, if you look at it that way, and we define the channel to take a contra position when the channel is crossing, you would see that more times or less, you would make quite a bit of decent amount of money with pretty limited amount of risk. But the number of times that you will trade in this strategy is quite minimal. So if you look at it in the entire year, the channel breakout strategy between May to, let's say, almost July, I think between mid-May to almost July end, would have given you 1, 2, 3 probably trading chances. Same if you look at then from September all the way till November, you would get 1, 2, again maybe 3, 4 If it's charging on the 4th, you would have definitely made a loss. We would have taken a contra position, the channel would have been erupted. So that's 6 active profitable ones, and then we look at the rest of the year from November all the way till March again, and you would see 1, 2, 3, maybe 4, 5 trading possibilities. A total 11. So even less than a month, or once a month, that you would get a trade position. But the good thing is, non-stress strategy, almost 80% of the times you are profitable with channels that define profit. So that's something that's to look up to. So play out this if you like it, and then we go on to the next week, and that's trade next. Next week, obviously, we'll look at trade deeper. We'll look at maize, as I said, and I wish everybody to have a happy Easter while we enjoy this with our new trade strategy, and then look forward to trading some more at TradeCraft. Finally, I wish that you have enjoyed this small presentation, and that the markets move in the direction that you take. Once again, this is the Trade Stylist, and we look forward to having you on the channel for your views, for your affection, and also criticisms, of course. So next episode goes out on the 6th of April 2024. See you, and wish you well on this day.